Alright, so the top chart is the YM. They're all the YM, but different views. The top one is a 5,000 tick, middle is 1,000 tick, and bottom is a tape reading chart. Basically a point and figure with volume. So I'm just going to go over how the turning point occurred in this correction. You see, like from here to here, right? That's the corrective behavior within these two parallel lines within this arrow. And then it turned and started going upwards. By the way, market right now is on a springboard. Like if it thrusts up, it's going to break out. I'll go into that later. Anyway, so let's apply some tape reading techniques. And what you'll see is, it was a rally and then the correction started, right? So you see that the correction started, you have heavy volume. That's telling you, that the market is correcting. It's telling you the market is correcting. And demand, look at the demand before that heavy volume and after that heavy volume. Where's the demand? There's no demand. Okay, sure, you have big bar, but there's no follow through. Who cares? There's no pressure, there's no buying. So this right here, this green, and this green, and this green, and this green, they're telling you that there's no demand. But there is supply, and once you have this, supply is in control, brings price down. But one of the things you want to note is that supply, you see this? What's happening to it? Supply is diminishing on these three waves, and then you have this heavy volume come in, but it's nothing to be scared about. It's just kind of like a minor climax, just trying to end the correction. And what's important is after that you have high volume demand. Okay, now demand is showing its strength, but supply could still be there. So supply has to prove to me that it's gone. Where does it prove? It proves it right here. Here and on the test. See that? So you have some type of ending action here. You have demand proving to me that it is strong, or it is present here and here. So you see that demand is proving that it's there, it's present, and supply proving that it isn't. So when you have that condition, when you can judge, demand is proving to me that it's there, and supply is proving to me that it isn't, you have the conditions for basically a turning point. Meaning demand is stronger than supply, and price in that moment is more likely to go up than down because of those reasons. And that's what happens. So this really right here is what's setting up the turning point. What's in that box is setting up the turning point. And that right there, it was accumulation. These guys, whoever sold, when they're selling here, the other side is buying, right? Someone selling the other side is buying or covering their short positions that they took up here. Okay, as one side is selling, the other is buying. They may have established shorts up here and then they're buying it back down here. So they're done. Now they're establishing long positions, which is what accumulation is. Establish the long position, there's no supply, more long positions, no supply. Market is ripe for markup. Market is ripe for markup. At that moment here in this box, you have the process by which the trend turns, the turning point process, which I mean you could call accumulation or all of those terms, but it's basically demand, no supply, more demand, and again no supply, setting up the conditions for movement up rather than movement down. Okay, so again you have this, then after that you have this rally, and you have this down wave. It's on 2. It's not, I mean, supply does come in, but demand is much stronger. And then on this retest, guess what? It's again proving that it is what? It is not present. And usually after that, if you have another wave that has multiple bars, but it is unable to make a lower low, it is this right here is effort reward. Effort reward or effort result, one of them, I don't remember. But the point here, this is an example of effort reward. Why? 1 bar did this much damage. It rallied 3 bars, is unable to take out the 1 bar prior low. What's that mean? That means that this is an effort, this effort to take the price down, and they couldn't do it. So the ease of movement must be up. The ease of movement must be up because the way the CM tested here was they just threw contracts, sell to see if they could push price down. It's not going down. 1, 2, 3. Look, there's much more volume than this prior red. You have 3, you have 1, but it's unable to make a lower low. Sometimes there'll be like a shortening of the thrust, meaning like a spring, like a slight penetration, but it has no follow through and immediately reverses. So in this case, it can't even take out the prior low. This is effort reward. And then after that, when it makes a high, it's for sure effort reward. Okay, meaning all that effort can't go down. Guess what? They're going to go up. They're going to go up. Demand is still in control. Pull back on 2. Pull back on 2, and look at what we have here. Lack of supply. Rally. Lack of supply condition has been met, and the market again is on the springboard again for markup. So which positions here is the market on the springboard? In my opinion, the first here, for sure, like after this reversal up, this was a springboard position. You can buy the test of that springboard. The second one was, well, actually both of these, because this is low volume here, meaning there's no supply met, and the reversal occurred. But also after he tests and there is no ability to go down, and the market reverses, it's again on the springboard. It's on the springboard. By springboard, what I mean is the market has some type of there are two types of springboard. One is near the low after the accumulation is done, and the other is after reaccumulation is done. Alright, because after accumulation you have markup, and then what you have is it marks up and then it consolidates again, and that's reaccumulation, and then it marks up again. So in either case, these are the points, here, and in my opinion, even though this showed heavy volume, this is actually on the springboard because they tested to go lower. They threw more volume, but it couldn't go lower. So ease of movement is on the upside. So it's like the real question you have to ask is, it is the moment regarding springboard, like what is a springboard, etc. It is the moment price is about to mark up or mark down. That's the situation at which price is about to mark up. Price is then on the springboard. And the situation in which price is about to mark down, price is again on the bearish springboard. So what do you think is occurring right here? Like this right here is a springboard position again for another rally up. This right here, why is this another condition? Why is this on a springboard? Because supply is gone. There's a lack of supply, and in this situation you have multiple waves down. When you have multiple waves down, there's a concept called a broad range of support. I think that's how Wyckoff described it. It has a wide range, a broad range of support, something like that, meaning that it's not just one pullback. It's 1, 2, 3. They're setting up a base from which to move higher. Okay? There's a base, that broad base of support. I think that's the term. Broad base of support is set up, and in my opinion, it requires at least 3 waves. Sometimes it's 2 waves, but never 1 wave. It would be at least 3, tries to go down, 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 and then sets up a base and ready to go higher. So this is that idea of a broad range of support. It means it's just a multi-wave correction that is moving sideways within a range. It shouldn't be like constantly going down, It should be more like rectangular. Alright, so there was a rally, there was a pullback, supply dried up, you have a broad range of support, and price is ready to mark up. And that, I believe that's what's going to happen here. So we're on that springboard position up again for markup. So this is the idea of a springboard, and to some degree how to use volume. I mean, you could use wave volume, or you can use regular volume too. I don't know. You could use whatever indicators you know, but you have to have an understanding of volume. I think it would also, you would get similar results if you did with bar counts, meaning time, and that is just, time is basically the number of bars. I think that would work as well, because the idea is there any follow-through? There's no follow-through. There's no follow-through, meaning lack of pressure. Lack of pressure. The follow-through is on the upside. Green, 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 green. Where? What? 1 red? Or 2 red? 1s and 2s? No pressure. This is pressure. Green, 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 green. New high. And multiple waves. New high. Boom. Similarly over here, I mean, you see what's going on. You go from heavy volume, blah, 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 to, look at this. Is it increasing? Is this increasing or decreasing volume? Supply volume, obviously supply is decreasing. Supply pressure is decreasing. Now there are times as it's decreasing, you might get a heavy volume wave. That's just the climactic ending action, and then it'll dry up and have secondary tests that indicate there's no supply. But I mean, the idea is eventually you have to reach a point where the following occurs: supply is weak and demand is strong. Whenever that condition occurs, where supply is weaker than demand, markets are much likely to go up. And that is the law of supply and demand. I'm just showing the application of it right here. You know, like, look, supply is weaker, weak, it's getting lower, lower, and then bang, you get this nice green bar and a follow-through bar. These two waves together have more volume than 1, 2, 3, 4, 5 waves, and they end the correction and make a higher high. Demand takeover. So it really is like it is understanding that, you know, and connecting it to the law of supply and demand. Whatever indicator you use, whether you're using OBV or, you know, some people use that, or there's a lot of different volume indicators, or you can just use raw volume. Raw volume is a little bit difficult, but I mean, people who are expert at it could use raw volume too, I guess, or use some type of cumulative volume. It's just you have to be able to read pressure. Alright, I'm done. Take care.